All right, everyone, welcome to this video. This is going to be on bias, long-term, short-term bias, different things like that. Um, and as a day traders, it's important to understand the overall direction of where we think the daily candle may print. So we don't necessarily need to know, where the month's going, where the week's going, all that type of stuff. It can help for swing traders, and if you do prefer swing trading, position trading, and you want to be more long-term trader, then you're just going to apply these concepts to like a weekly chart or a monthly chart and go from there. But as day traders, we want to understand where the daily candle is going to go. So originally or initially, you still want to mark out your key levels and you want to see what phase of the market that we're in. So if I'm looking at the daily and I want to know what we want to focus on, we need to look for our large expansions and then our accumulations. Because in the order of delivery, we're always going to want to find where the accumulation started and how we traded around there, and then where we are expanding. So immediately after this is today, I'm looking left and we have a large downward expansion. And then this would have been our accumulation because this large candle has been housing all these candles. So inside of this candle, we have our accumulation. We want to know what's going to happen when we trade above or below it. The first side that we close out of, if we're coming from a downward trend, is most likely going to be where we are taking buy side liquidity for the order of delivery. So if we understand that the expansions are moving to the downside, then our overall bias where the herd is going, by herd I mean the large money, the large market makers, because the institutions are mainly putting money in on larger time frames. So where the larger time frames are going is where the lower time frames are going to go, and then so forth. So expanding down, now we have an accumulation. Once we close outside of it, we want to see how we're trading up here. Are we going to close back inside to give us a buy side market structure shift, or are we going to be expanding above it? As we close outside of it, we are creating a gap and then we're closing it in. So as we're continuing to expand to the downside, we're following the order of delivery here. But as a day trader, if we don't want to look at all that information, we can look at the previous day's candle. So one way it's one of the simplest ways to figure out daily bias with understanding where you're at in delivery is if we are closing above or below the previous day's candle. So starting here, if I'm looking left, the previous day closed below the low of the previous candle. That is signifying bearish movement. So this day, I'm looking at possibly a trade higher and then to continue going lower. If you look at this day here, this day closed above here. So when I'm getting on the charts here, I want to possibly take a trade in this same direction as the previous day's close, which we do get a nice move here. Remember, we don't have to, we're not trading every little piece of this single candle. So all we're looking for is a few good trades in the direction, and then if we are invalidating it, then to take the trade in the other direction. But since we closed above this high, initially I'm looking for a run to go open, low, high, and then possibly close to the upside. The caveat comes with this when we're following the order of delivery. So there's a lot of people that just use this as their bias, the previous candles. But what separates us is we understand what should happen based off of what's happening here. So because we have an accumulation, buy side, sell side, which would have been here, now we're starting to close up. So in the order of delivery, this to this is what we want to see. So when we look left, the opening prices of each day are significant. We have origin and OGC here, and then we've got some failure swings. Each day's opening price is significant because it's an entire day. Each candle is essentially a day. If this was a minute chart, it would be the exact same thing. That's the fractality of the market. If you didn't know this was a daily chart, then it could be a minute, a 5 minute, 4 minute, whatever chart you're trading. Everything works the same. But since this is a daily chart and we're looking at the daily movement, if we're in this portion of this order of delivery, then we want to see what's happening at our key levels. We hit the key level, immediately reject. So if this is our failure swing, which is liquidity, that if we sweep that, it means we're selling the level. Once this starts heading back down, especially on lower time frames, and this candle closes, then this day I'm looking for it to trade up because we need open buy side to trade lower. The way a candlestick forms is the way this order of delivery works. So it has an open, high, a low, and a close. This is how a bearish candle forms. When we open and we trade up, that's good for a bearish candle. If we open in the day and we trade down, this tells me that we could possibly be forming a bullish candle. And this is how it looks. Open, close. I know it's not right in the center, but this is your wicks. There. So this is what this candle looks like as an up candle. Adversely, it's the same thing as it is down. So we have open, high, low, close. Open, high, low, and then we could possibly close in here today. But we still got a lot of time left in the day. So not sure if we're gonna continue lower or go up. But point of this conversation is the way we close based off of the previous candle can give us a direction for the next day. If we're looking at more examples here, the close is what matters. So we had this expansion down here. We closed below this low. So I'm expecting the next day to possibly expand lower. Open, high, we do trade lower. At this point in time, though, you probably get a really nice trade, maybe a reversal trade, but we never closed below this low. So then I would be expecting the next candle to close below this low and then possibly this low. This low here fails to get closed below here. We're looking at this candle here, fails to close above here, and we're still not closing above this initial candle. So when this happens, now we have an accumulation starting. That's when you get this. So if you understand what candle you are trading inside of, then you'll understand the levels that need to get hit. So you can follow it candle by candle like that, but you also want to have the overview of where we're at in the order of delivery. So we've been on an expansion down, and now we stopped. When we're moving sideways like that, if we're going to continue, just like the way a candle opens, if we're moving sideways and we at the open, we still want high buy side, sell side retracement expand. So when we're looking at the overall delivery like that, we still want to be familiar with order of delivery. For the daily chart, we want to look at how the previous candles are closing. And then we mark things that we know and that we love. So we have an expansion down. You can use this for the bearish expansion because this is where it stops. Or you could use this, either one. So our levels that we're looking at are going to be above 50% for a retracement. Up close candles are closing. This candle closes above this candle, so the retracement is in play. But we still want to know what key levels are up here to then tell us, are we going to continue buying or are we going to continue selling? The way we trade here gives us our bias. Once this candle closes, we're continuing bearish order flow. So when we go down time frames, we're going to use the open of the days, which is 2 a.m. Central Time. To show us what movement has happened between the open and when we get on the charts. So once we have the daily direction down here and we have our daily key levels of where possible targets can form, here's that 50% level. Now, when we open and trade lower and we're trying to get up here, that's something that we want. So as long as we know where we're trying to go, we can follow the 1 hour that way. So as we're trading lower here, we're leaving failure swings. Our short-term direction is higher because the previous day closed above the previous day's high. So to go higher, we grab sell stops and then we expand up. As we're expanding, each hour is closing above the previous hour. So just like the daily, the reason we follow the 1 hour time frame is because it can give us significant trades and give us significant information as to where we're going to continuously go. Closing below the low, closing below the low, closing below the low, fail to close, and now we start closing above highs. So this tells me that open, low, high close is possible for the next hour. And we can follow that. Here, we failed to close above. This hour, possibly bearish. But then we are also still in a bullish fractal. And our key levels are up here. This was wild. This is kind of insane. But we still had the reaction off of that key level. It's not a black swan event, but it's like one. So this is just out of the ordinary. But these are trades that we can get in on the lower time frames once we hit our key level. So we have a basis of an overall direction based off of the daily chart. Now on the 1 hour, we do the same thing when we're looking at key levels, OGs, OGCs. We've got lows that we can form, built up buy side liquidity that we can run. So you want to make sure you're looking at what is being engineered on the 1 hour as we're moving. So for a day trade, I'm looking for a buy up to here. when we're hitting the key levels and we're getting the information that we're failing to close above them, then that's when, as day traders, we can make adjustments and we can take short positions. Here is some other key levels that if we're wicking, these are short trades that we can take. So we don't need to marry the bias, but we have to have an idea of where we're going to take the trades, where we could possibly go, and then once we get there, how to trade accordingly. So when we move down time frames, and we add in the overnight session, we have an idea that from the open at 2 a.m., we traded down into an area where previous buying was done because you've got your key levels. How did we trade there? Well, we're failing to close below it. We have a change in the state of delivery, a really explosive one. But coming from the daily to the 1 hour down to the 5 minute now, we're looking at the same key levels, coming back to fair value, and then putting it all together. This fails to expand here, so these cells are permitted because even though these are daily levels, this is the reaction on the 5 minute. And now the more we head down time frames at our daily and our hourly key levels here, we can see that we have valid trade ideas and we can get into these type of trades. Even though we were bullish from here, we're now failing to expand at a key level where higher time frame previous selling was done. So understanding these are sell key levels helps us determine what we want to see here. But this is how you don't get lost on the lower time frames. So as a study, you need to go through the charts and then see what these candlesticks are doing. So closing above, closing above, closing above. We may get a buy in here, but then we're failing to close above or below these candles, which means we are accumulating inside these candles. So we always look left to see what happened. Well, here's the high that we took. If we're failing to expand above a high, that gives me information and tells me that we may be coming back down for internal liquidity here, which is in the form of the failure swings. Start closing below. So now we expect open, high, low, close. Open, high, low, close. Closing below. This one fails to close above or below this candle. When that happens, we're not switching bias or anything. All that means is the next candle is most likely going to expand. And since we are not closing above this high, it could expand in the same direction. Failed to close below. Failed to close above the high, but we did trade through the low. So at this point in time, we need more information. We want to see if this candle is going to continue the sell bias, because in a sell expansion, down close candles need to close below down close candles. So we see what happens here. Trade up, low, high, close, and we did close below here. So we're still expanding to the downside if we're closing below down candles lows. So go through the charts, study them like this. You can study this on any time frame, the candle by candle, but then try and fit it to, are we in an accumulation? This is a very large accumulation and consolidation, but you can see that these are this large candle is where we're accumulating inside. We close below it, but we keep going back inside. Close below, back inside. Wick below, close above, and then we finally go below. So try and think in terms of, am I in a consolidation or am I trending? Because it'll give you a lot of information. Um, in the next video, we're going to go over how to frame the day. So it'll put it into a more of a process. But this is how you can get a long-term and a short-term bias. All right, see you in the next one.